if you don't have a clear direction on where you want to go, the best option is the option that creates more options. I was on a plane every Monday through Thursday, every week, flying to a different city, doing a consulting thing.
Shiny object syndrome has become a thing. We've learned when to say no, and I think that's very important in entrepreneurship.
So just kind of following the path and starting small and just following where that lands. Live a lifestyle of 4% of your net worth or less per year, right? So, and if you're never depleting principal.
But like, don't build 10 and then have all of your bridges fail in the middle of the body of water, right? So build one.
So I built 4, all of them were 7 or 8 figure businesses that were awesomely successful, and I loved them and all this kind of things, but they were a hobby for me.
Welcome to Immersion Season 3. Today we are honored to interview Ken Wilkins. Ken, I could probably have a very long intro for you, but I'll keep it short and sweet. You have successfully closed on multiple businesses and exited them. You are a consultant and have a lot of background in real estate investing, which we weren't privy to, and I think that's really where we're going to dive deep today. But welcome to the show, man. We're happy to have you here.
Thanks, man. Great to see you guys.
Good to see you too, man. Yeah. We have a lot to cover. I think before we dive in to like all the nuts and bolts, let's talk about, just give us a background, who you are, where you're from. We learned today you're from Cincinnati, you now live in Puerto Rico. Just give us like a 10,000 foot view of who you are, where you're from, and then, how you got into the entrepreneurship game.
Yeah, definitely. So I think at my core, I'm a builder and a creator. Those are the things I love to do. And I knew that from a young age, but I didn't really know what to do with it. So to fast forward to the end, I'm a serial entrepreneur now. I've started 13 companies, most of them in the real estate space, in the consulting space, and in investing as well. And, growing up in a, very lower middle class neighborhood outside of Cincinnati, and just always kind of having a hunger for more. And I don't know why, but I kind of grew up at a young age just knowing, like, we talked about fire earlier. So Mr. Money Mustache, shout out to you. One of my early, reads on the blog. So this was before the days of podcast even. But I kind of had this drive to find fire in a lot of different ways. So grew up in a family full of engineers. And when I went to college, it was kind of what kind of an engineer would you like to be? Not necessarily what do you want to do with your life? So followed that path. And, one of the early pieces of advice I got from my grandfather was, if you don't have a clear direction on where you want to go, the best option is the option that creates more options. So my early life was kind of focused around that. Like, I always was an overachiever in school, always very hardworking, always driving and grinding for more, and just kind of was opportunistic in the journey as I went forward. So went to Ohio State, got my degree in engineering, still didn't know what I was going to do entrepreneurially after that, went to work for Accenture after that, fell in love with kind of the consulting mindset, but realized kind of the big company consulting mindset wasn't for me, and I always wanted to do things that were smaller just so I could focus on building and growing and creating. So that was the beginning of the journey.
That's great. I mean, so we know after talking to you for a couple minutes here before our podcast is that actually you got your start in real estate after, you worked for somebody else. I'm very curious about how you got into it with the hard money lending aspect. That's typically not how we hear people get into real estate. Maybe I'm fast forwarding a little bit, but that's not typically how people get in. Ryan and I know this game by buying a single family or buying a duplex, living in one unit, renting out the other. Okay, we're going to go from 2 units to 4 units to 8 units. Finally, you have enough money to then be the lending arm. Yeah. You kind of reverse engineered it, and you mentioned to us that you thought about it in a different way, and you were able to scale to, I think, did you tell us over 500 units? Yeah. Okay, great. So how did you get that start, and then maybe what about real estate sparked your interest?
So, I feel like the model that I grew up with, probably many people that listen to you guys, is you just throw your money in the stock market and invest every year, get your 12% returns every year, and you're going to wind up retired at 65, living on a beach, playing golf somewhere. And I read Tim Ferriss's 4-Hour Work Week, right when it first came out, and I just kind of got inspired by different ways to do things. So I started dreamlining the life I wanted to live and how I wanted to get there. And I knew public equities weren't really for me. It was kind of a casino. Some years it's up, some years it's down. It's very hard to pick winners in that space. So I got really interested in the idea of real estate. But as a traveling consultant, this is kind of where the opportunistic nature comes from. I was on a plane every Monday through Thursday, every week, flying to a different city, doing a consulting thing. But I really wanted to flip a house. I really wanted to follow that traditional journey, but I just couldn't do it. So I reconnected with a buddy of mine from high school who had built a pretty big house flipping business in Cincinnati. And I kind of worked out a deal with him. He was looking for hard money. And I was like, I don't know anything about real estate. I don't know anything about hard money lending. But if you teach me, I will invest in your first property or your next property with him, right? So I basically worked out a deal with him where I could be a student of the game. And I told him I wanted to have the experience of flipping a house myself, but I was just going to put the money up. So we worked out a deal where he would like send me pictures and send me like little emails about what he was doing. So I kind of got to flip a house without actually flipping a house. And I really enjoyed it, and I learned a lot. And then once I kind of followed his model of how he brought hard money in and how he did that, then I recognized some opportunities in that space of like there were some complications to the way that a lot of people do hard money. The biggest insight there is a lot of people in the market were taking a lot of upfront fees, and there were a ton of diligence, paperwork, all this stuff that the borrowers hated. They wanted speed. They wanted to go fast. And so I built a different model because I had a lifetime of trust with this guy, and found other people in the network where I could basically take away all the front end fees and diligence and put them on the back end of the deal. So I'd get a higher rate of return doing back end payments because at that point they've already kind of gotten liquidity, and not having to make monthly payments up front was very valuable for them. So I found a way to get comfortable from a diligence perspective and move faster than most other people, and that gave me a better return, made happier borrowers, and that's kind of how I got started in the game. And I got to feel like I was flipping houses even though I wasn't doing it.
Totally. It's so interesting. I think there's two sides to this coin, right? There's the private money side and the hard money side. And so a lot of people go to mom, dad, a relative, friend, someone to like lend them private money, but you built a company around that. Can you talk about the rules and regs compared to someone just kind of like getting cash from a friend?
Yeah, so luckily this first guy that I worked with had spent a lot of money with lawyers building out the documents, right? So I think the most important part from hard money lending perspective is the security of the asset. So having that first mortgage position on the property, making sure you've got assignments of leases and rents and all the things that I'm sure you guys have talked about a lot on this pod, but making sure the legal docs are squared away is probably the most important part of it. And knowing that you have a perfected security in that property if something were to go wrong. So luckily, we only had to foreclose on one person, I think, over the 15 plus years I've been doing it, but it's been nice to have those ducks in a row. And then as a consultant, I kind of know the business side of it, right? So setting up the LLC, getting the account, and kind of making sure you're doing the things properly from that perspective, that was always easier for me to do. And I think a lot of people in this game forget to do those things, right? So it's even shocking, like some people I've met in this space even forget that they have to pay taxes if they're not being taken out of their W-2 paycheck, for example, right? So so just kind of following the path and starting small and then just following where that went.
Yeah, I'm curious about the scaling because that's like seems to be a theme for you. You've scaled not only the real estate but multiple businesses, and I wonder that's where Ryan and I are in our journey right now. Like we're at this phase where we're like, this is working. We have proof of concept. Yeah. I'm a full-time coach and an entrepreneur. It's like funny saying that about myself and a real estate investor, but scaling is the next level. And we're talking to somebody who we could selfishly get a lot of information from. So
I love it.
My question, what do you think that is there a common theme to entrepreneurs that scale better than others? And maybe talk about some specifics of, you can pick one of the businesses that you scaled and what you thought about and how you were able to move in the way to grow it.
Well, you're speaking my love language as a consultant. I love to consult and advise and all that. So here we go. But I think we were talking earlier, and I just want to compliment these guys too publicly. I mean, I took a quick skim through the history of the podcast, and you go back to 4 years ago, and it's just two guys in a room on probably a camera on your computer, and you could tell you're nervous, and it's just getting started. And you told me earlier that it was painful to go back and watch that in yourself, but looking at the quick progression, so taking a couple snapshots from 4 years ago, 3 years ago, 2 years ago, and then 2 months ago, or the few I got to watch before this, I mean, you can see a dramatic improvements in your confidence, most importantly, in what you're doing, but then you kind of add the polish around it too. So compliments to you guys. I mean, I know you think you need to scale, but you're starting to do it already.
Thank you. Appreciate it. Taking 4 years.
Needed that today. Yeah, man. Thank you.
Appreciate you can see the traction you're making, which is awesome. And I think, the number one thing that I love to talk about in this space when you want to scale is just to do it, just to keep after it and to work hard and have patience. So I think in the modern kind of influencer era that we're in, people just see the flash and the success, right? So I think a lot of people that are getting started out in today's day and age, especially, just want it to happen overnight. They're like, how can I quit my W-2 job tomorrow? And how can I travel the world and have fun? And they see guys like Jesse running around doing this stuff, and it's awesome, right? But Jesse didn't just wake up one day and start doing it, right? Most people don't just wake up one day and have 500 units. Like, it takes a lot of time to get there, and it takes a lot of time to get to 240 episodes, right? So having the patience to know and the dedication to stick through it and to continue to work hard and not give up when, something happens, your day job gets in the way, et cetera.
Yeah, I love this. And by the way, thank you for all the advice that's I'm sure to come in the next 30, 40 minutes. But I will say, kind of as we go through this, it's kind of learning when to pivot, because you can spend a lot of time, energy, and effort in one lane, and you're just like, you keep kind of hitting your head over the wall, and you're like, oh my gosh, like, am I doing the right thing? And for the podcast, we kind of just focused on, like, Corey set this up in the beginning. He's like, dude, every Wednesday, no matter what, we're just doing this. We're showing up. And you mentioned the confidence comes, the learning come, the preparation, and all these things that lead up to it. They lead to better episodes. He and I have like kind of grown as entrepreneurs, as people in general. But the one thing that we've kind of learned over time is just like trying to chunk and get 1% better every day. Yeah. And I think that's the most basic thing I could possibly say on this podcast. But for you, you've done this over and over and over and over, 13 different businesses. As you've scaled, do you notice like when a time to pivot has come? And, you know, we're kind of at this, I asked this because we're at this inflection point where he's full-time, I'm still managing my W-2, as we kind of mentioned previously, and we're trying to spend our time doing the right things, like revenue-generating tasks. And we talked about putting the right butts in the right seats and who to hire and when to hire. So any insight there from guys who are kind of like, you know, are a little bit of our story now, like as we're trying to lift off here, you know, next steps.
Man, we could talk about this for days. So many thoughts. You know,
you can send us the bill later.
Totally. But I think one of the most important things is to have multiple streams of income and to not pivot before you're ready. So in the same spirit of having patience, you know, I'll give a quick story about me and we'll get back to you here. But when I pivoted from hard money to building a portfolio, you got to be opportunistic, but also not kind of give up your safety nets as well on the other side. So I think I respect the fact that you still have your W-2 job. I know you've recently been able to leave yours and kind of focus more on this, but kind of making sure you're doing that in stepwise fashion, you're already thinking about this the right way, in my opinion, where you didn't both quit and just go all in and say, chips on the table, I'm ready. Let's go. Let's scale tomorrow, right? So you're doing it in incremental steps. You waited as long as you could. Then you took the leap. You're still in. You're going to take the leap when you're ready. I think you'll find those spots when it's time. So when I pivoted from hard money into building a portfolio, it wasn't actually a pivot. So I had one of my borrowers, after several years of doing this, came to me with a big 45-unit multifamily complex that I frankly couldn't afford to lend on, but I could afford to buy with bank money. And I loved the project. He found an amazing deal. So I brought him in as a minority partner, hired him as property manager, and then basically bought the building. And that started the journey of the multifamily part of the house. And so as that was going, right, so basically got more and more interest from, once you are on the map buying a big property like that, then all the realtors and brokers, everybody's coming after you. So we had more and more opportunities, right? And as we did that, we were looking for, it got too big for him to manage after we had probably a couple hundred units. And we were looking for a property management company to come in the door. We tried a couple, interviewed a bunch, couldn't really find one that fit, so we decided to build our own. So that was real estate company number 3 then. So we had the hard money still going at this time, still providing cash flow coming in, still was working as a consultant at the time. I'd started my own consulting firm at that point, so I had cash flow coming in that way. And then I was bringing in my own money to the table to fund the real estate growth. And then as we started the property management firm, I already had my own property, so we already had our customer base pre-built. I knew exactly where they're going to go work, so there was a lot of less risk in that. I knew how I was going to scale it because I had money coming in the door from 3 different revenue streams. And I had a leader already in place that had been with me for a few years now, and we knew we worked well together, and I could have the bandwidth to scale that business while I still had kind of a full-time job building my consulting business. So I think making sure you've got your bases covered and you're not going all in on any one thing until you know that it's working. And at the point when you get to, in this case, 500 plus units, it's really thriving and working. That business is fully self-sufficient at that point. We've got a property management company that's running it. And you don't have to really guess anymore, right?
Yeah, it's really interesting. I have one more, and then I know Corey has to go. So for us, it's as we've seen success and as we've grown in this thing, people start coming out of the woodworks with opportunities, right? And like the more money comes, the more money that people, I say when more money comes, but like when people realize you're building something, they want in on it, or they just want a piece of your time. Like, oh, this is interesting. Like maybe I can latch on with these guys and scale up. And so we've had a couple of people approach us with different things. Shiny object syndrome has become a thing. We've learned when to say no, and I think that's very important in entrepreneurship, and you can attest to that. But
only by failing is when we've learned to say
by failing. No. Oh, we've definitely taken the opportunities and failed them.
Yes, we saw the shiny object, we did it, and then we realized that was a bad idea. But sorry.
As a quick interjection, though, I don't believe that mistakes are failing, right? Like it's just learning. So even if it costs you a lot of money, we joked early on, like we had the one guy we foreclosed on, probably lost $100,000 on that deal. But we basically bought an MBA, right? We paid for learning. I paid $100,000 to learn mistakes. We improved our legal documents. We improved our diligence process for how we found them, and we never made that mistake again. So I think as long as you're failing forward and learning from it, I'm taking the time to be thoughtful and pensive. There aren't mistakes, right?
Totally agree. If you don't win, you learn. You don't fail. There you go. So a couple things. We had, I believe his name is Mike Ayala on the podcast maybe a year ago, and he had a quote. Something goes like this: like you go to war as an entrepreneur, you're going to war every single day, and your job is to not only grow grow the army, but to protect what you currently have too. And so it's like just protecting your wealth, growing the business. Yeah. But for us, it's like protecting your time too. And so someone approached us about the hard money thing. And I thought that was so interesting because we have deals that come up all the time. Yeah. And I mentioned to you a little bit tentative to go to family because then it's the first topic of any holiday party you go to. Oh, I lent him $100,000 and he's working on this deal for me. And then everybody's asking these questions and it's just mixing family and business is interesting. Yeah. Try to probably stay away as long as you can. But at what point do Corey and I say, hey, this private money thing, the hard money thing is actually something we should do when all of our attention and focus right now we think should be on scaling our coaching program, which is like our biggest foundational piece. So that's where I'm trying to like make sure we kind of pause when appropriately and not take on too much.
I want to add on to this before you answer the question because I've been taught, and I love this conversation because there's a billion ways to skin a cat, and like you can do things differently. But we've been taught don't build 10 bridges, and the bridges stop.
Shout out to the bridge. Thank you.
Yeah, the bridge. There you go. There you go. Yeah. Build one bridge that is as good as that bridge, right? But like, don't build 10 and then have all of your bridges fail in the middle of the body of water, right? So build one and then focus on multiple streams of income. But it sounds like you kind of like your strategy was like you were able to manage multiple, and I don't know if that's exactly where you were going, but like, how do you know when to say this next venture I can allocate time differently? Or I'm hiring, like, you know, so I don't know if you have insight on how to know really. And I'm speaking this to like ourselves, but also there's so many people that are listening. They're like, they come to us with ideas or they have ideas. Should I flip? Should I wholesale? Should I buy and hold? Like in the real estate space. Yeah. So how do you know when to make the pivot, I guess?
Yeah, I mean, there's always a balance. So if you think about the spectrum of do I focus relentlessly on one thing or do I, chase a bunch of dragons and try to do a lot of things, you're going to have to find your own place of comfortability. But one thing you said to me earlier when we were talking was that you're so excited about what you're doing. So for me, passion and excitement and energy are the barometer, right? So if you're doing something that is energy draining, like that's not the right thing for you. So there's a Japanese concept, probably everybody's heard of it at this point, ikigai. You heard of this one?
Yeah, I've heard of the name, but
so it's the Venn
give us the
diagram of
rundown.
where kind of your passion, your purpose, your vocation, and your mission, I think are the four. I always get this wrong, so somebody's going to correct me on mine. But there's a great Venn diagram of that. When you find the place where all those things intersect, like that's when you know you're doing what you're born to do, right? So, for me, I always want to have some aspect of building, and I want to have multiple income streams because my prime directive on all this when I started was FIRE, right? I wanted to make sure that I was able to have that financial independence, retire early, and I really enjoyed building things. So for me, the best way to get to that outcome was to have multiple different things I was doing. So if any one of them failed or didn't work, I wasn't out of business, right? I wasn't out of that game. So if you figure out like what is it that's driving you, right? And what is your passion and your mission behind that, you can really start to align what you're doing to things that draw you energy. So I mentioned this earlier too, there's a great book that Reef Coleman recommended to me last time in Immersion Season 2. It's called Buy Back Your Time by Dan Martell. So thank you, Reef. I read that book cover to cover, listened to it, of course. But
Dan Martell, if you're listening, come on the podcast.
Yes, Dan, I heard you said no, but I know that's probably your gatekeeper if you're following true to your book. So say yes. These guys are great.
Appreciate that.
Anyway, so Dan basically talks about this idea that, most people when you try to grow and scale, and I made this mistake early in my career. If I want to grow and scale, I'd say, I need to hire a business development person to help me grow. I need to hire a chief operating officer to help me scale, right? But in reality, what I need to do is buy back my own time because no one's better than me at selling my own business if I'm passionate about it and I know it and I built it, right? And, I'm also a really good operator. So I know that I don't need an operator, I don't need to scale, and when I've tried that in the past, that kind of failed for me. But, if you follow Dan's advice here, it's you buy back your time with the things that drain energy from you and that you're not really passionate and good at and things like that. So what I should be doing is hiring a personal assistant to manage my calendar. And, the reason I kind of gave him that shout out is in the book, there's a whole chapter that talks about how do you use an assistant, how do you use them as a gatekeeper to prevent you from getting sucked into things you shouldn't be getting sucked into. How do you manage your calendar? Like we all set up our calendar. Like if I look at your calendar for next week, it probably looks beautiful, right? But when you get into the week, I bet you it probably changes at least 50% from what you thought it would when you started the week. So again, if you turn your calendar over to an assistant who can adhere to the principles and guidelines you've built for yourself, you're going to have a better line of success, So there's lots of little things like that you can do, but I think as you're thinking about scaling, I kind of don't remember where we started with this question, but I would think about how do you figure out what's your highest and best use, where should your time be focused, make the most important thing the most important thing, and anything that's a distraction to that, you should kind of try to outsource that as you scale so you can do more of what you do well, and then that will bring scale. Right?
So at what point do you feel like you do need to hire the person that can remove yourself from the day to day, so you're not working 100 hours a week. Where does that intersection come in? And I asked the question in a way because I was working in my family's business, and what I realized, and they'll tell you this too, if they don't know if they're listening, but my father and my uncle were the business. They couldn't function unless they were doing all the tasks, and the business lasted for 60 years, and it was successful in many metrics, but they didn't have the exit that they wanted because I thought they weren't able to replace themselves. So it sounds like you're saying start out in a place where we're hiring VAs, we're hiring assistants, we're hiring somebody to take the tasks that you're not generating high revenue dollars from and off your plate. But at what point are you the bottleneck, and how do you know that that happens?
Yeah. So I'll give you the typical consulting answer of it depends.
Right.
And I would begin with the end in mind of what do you want to achieve? So when I think about the family business example you gave, there is such a thing as a lifestyle business that you never want to sell. Like, some people love it. And I love building things. Real estate was always my side hustle. So I built 4, all of them were 7 or 8 figure businesses that were awesomely successful, and I loved them and all this kind of things, but they were a hobby for me. So I didn't mind working 100 hours a week because I loved it, right? And if your hobby is your business and you'd rather be working on building a business than playing a video game, then, that doesn't mean you're doing something wrong. So I would start there and say, if you do want to scale to exit, ultimately there's founder risk. If you're selling a company where, you're demonstrably involved, you have to solve the founder risk to be able to exit. So that's one outcome. But if you're not planning to sell it, you want to build a lifestyle brand, you want to have this for years, you got to think about the reason why you're doing things. So I think if your goal is to scale, then I think doing some analysis of like strengths and weaknesses for yourself, as you do the analysis of what can I outsource and what can I give away to an assistant, there's going to be some things you find that they're too high level for an assistant to do. But you hate them and they drain your energy. So that's where you hire somebody else, right? You hire them to do, like, if accounting is your nightmare, right? Hire an accountant to do that. But if you love numbers and you love spreadsheets and it makes you happy, do it yourself. I happen to love spreadsheets. I did a lot of my own accounting for years, and it wasn't a distraction for me because I liked seeing the dollars and cents and where they fell. And I knew where every single dollar in my business went, like down to the penny. And that gave me power. I loved that. And I knew as a lender, then I could take money out of other businesses, bring more to this so I could lend. If I wasn't intimately familiar with my books, I wouldn't have known how to do that. So it always depends, right? And I think getting really crystal clear on your ikigai, right? And your where you're good at, what brings you energy, what doesn't, and what you truly aren't good at, then you can start to zero in on how you scale appropriately. It's going to be a different answer for everybody, every business.
No, that's helpful. And thank you, by the way. And it's so interesting. It's just when you hear basically like giving dating advice, right? I could give it to you, but because my
give it to yourself, it's tough.
You cannot give it to yourself. So I like this conversation a lot because, so as kind of Corey and I mentioned to you, like the one thing I think that both drives us and gets us excited is that the lifestyle brand, the podcast, like having conversations with guys like you. I've always wanted to know, bring it back. I was actually a big Mr. Money Mustache guy myself. I always thought it'd be cool. I always like envisioned how awesome it would be to walk around the streets and just see like at the top of someone's head, like what their net worth was. So I could go talk to that person. Just be like, how did you do it, man? I'm so curious on how people reach success. We all have this finite amount of time here. And for some guys to just make it while others stop at some point because of X thing, it's just so interesting to me. And I think that has kind of like led us to where we are today. So we have this business, right? But we want to be able to do this full time, you have to monetize it. And you have to like the word scale and like make it bigger, right? But it's almost doing it in like a small and mighty way. So the way we're trying to do this is build arms off of it, right? So that's why I mentioned potentially the hard money lending arm. We have the coaching program, and then we're building our own portfolio. And then we have syndications where we raise money and we do investor relations and manage the relationship between the property manager and the investors. And so there's a couple things swirling, and we're just trying to find like how they all kind of go in synchronization with each other while still managing the W-2, and then he's full time. So this is a very helpful conversation. We're just trying to navigate selfishly, like how do we, what's the next level for us? Because it's fun, it's great, right? But to be able to survive and then scale is just a different beast.
Well, and I would challenge one thing you said is that, in order to grow and scale, you have to monetize. So I think I would be careful about what exactly you're monetizing. Thanks, Daryl.
Shout out, Daryl. Thanks, Daryl.
Daryl's the man, by the way.
We love Daryl.
Yes. Immersion number 3. Well done. Keep me honest with my mic. But yeah, I think making sure you focus on what your goals are and incrementing your way through them. So, for example, next goal for you two might be to get you out of your W-2, right? So there are lots of ways to get there that don't necessarily require monetizing your audience and monetizing your podcast yet. So if you want to get into hard money, you want to start doing your own real estate, like you could find another revenue stream that solves that problem first, And then once you're out of your business, you're going to have a new lease on life. You're going to have a new look, new energy, new time you can allocate to this business, and look at this ecosystem and figure out where do we want to take it next. So if the path to getting you out is monetizing podcasts, you can start there, right? But there's lots of ways to skin every cat. And I think you got to just take the time to think about, where do I want to get in the end? Let's back that up through multiple milestones to hit, and let's try to solve each milestone together. A lot of people make the mistake of saying, look, I want to have 1 billion followers, I want to do this. Like, you get so distracted with the outcome you think you want for years from now. It's very, very hard to think about how do we get through the next month, right? So I think the more you can begin with the end in mind, but build your plans and strategies in tangible, tactical ways that are very achievable. You got SMART goals, you got all the stuff you read about. We can talk through any of those if you want to, but how do you find tactical ways to get through your next milestone that puts you in a position to get to the ultimate goal? But honestly, as every business owner will tell you, you're going to pivot. You're absolutely going to change. And if you get too married to a big outcome, you will feel disappointment if you don't have 1 billion followers, for example, when you may not actually need that to monetize what you're trying to do.
So it's very helpful. One other thing I want to mention is, like, it seems like as we're building these things, it's always chasing down the active income. And I think we're trying to build a level of passivity through our real estate portfolio. Yep. It takes a lot of single families to do that, to build the cash flow to sustain. Let's just say, for an example, Corey and I each won $10,000 a month passively. That's 20 grand we got to come up with through our portfolio shared together. It's going to take a long time. We're working our way there, and we thought, okay, well, once we get there, then everything else will come and we can build it. Now we're trying to take a step back and build it as we are going through that. So I think it'll probably just a side conversation it'll take to like really dissect this, but it's like,
I'd love to dive into it with you.
That would be great. Sure. We'll take you up on it. I don't want to bore anyone else here, but I think people are in this phase too, building their businesses, that are listening, and they're like, how do you get there outside of that one thing? Like, our lane is focused. We're like, the only way to do this is through buying real estate and paying us passively. Maybe there are other passive income streams. We have sponsors that pay us. We have many income streams, right? And it's just trying to have as many as we can to have that foundation where we can start playing and assuming more risk.
Well, here's a quick example I'll share, Jesse, if this is okay. We can cut this if it's not appropriate. But looking at this sponsor here on the table, for example. So as Jesse and I were talking about, from immersion 1 to 2, what are some ways that we could generate increased revenue and make it more sustainable? I don't want to share too many details about the business, but we needed to get more profitability in the business. So there's two sides of that coin. There's bringing more revenue in, but there's also reducing cost. So we talked a lot about how can you offset some cost from it, which equals the same profit in the end. So Jesse started reaching out to a lot of different sponsors to provide things that are valuable for them because they want exposure. So it's a win-win scenario, right? But it also saves him money he didn't have to spend, because if he didn't have this donated or sponsored, he would have had to buy that, and it comes out of profit. So I think you can attack this from multiple different ways. And again, we'll dive into some more details, but being clear on, is it 10,000 in revenue, or is it, a certain amount of kind of after expense number that you need to get to? And could you alleviate some expense through partnerships, through sponsorships, through different things? Lots of ways to skin that cat again.
Yeah, I love it.
There we go.
Oh, yeah.
Thank you, sir.
Here you go.
Thank you, sir.
Shout out kombucha.
Shout out. Cheers. Outstanding.
Make sure everyone sees the.
It's delicious.
Make sure as you're moving to,
Yeah.
remember that thing in your mind?
Yes.
That's the thing in your mind.
Thank you. Well done. Daryl for the win again.
Daryl, we love you, buddy.
Wow,
That's delicious.
Wasted off that. That's
Didn't
so
think
good.
I was going to be doing boot shots on my first podcast here.
Neither did
How
I.
about that?
Wow.
Amazing, by the way.
It is delicious. This
This
is
is,
second immersion. We had these, right?
Lavender lemonade.
Yeah.
Amazing.
Very
Okay,
good.
so I have some maybe more thought-provoking questions that might think
Lay it on
get
me.
you thinking. So let's just say, Ken, you were stripped of everything today. I'm very curious tactfully about the moves you would make to try to build it back. And I'm not suggesting that you're on a deserted island. You have to get back to civilization. I'm just saying, if your assets were taken, everything except what you have up here was taken from you, what would be a couple moves you would make to try to build it back?
Yeah, great question. I think one of the best things that comes with success is confidence in yourself and confidence in your abilities and kind of clarity in knowing what you're good at and what you're not. So, one of the reasons we've been able to scale the bridge very successfully, for example, is because early on, I recognize my strengths and weaknesses, and I have a business partner in this business. His name's Robbie Riggs. brother from another mother. Shout out Robbie if you're listening. But we complement each other very well, right? So
Thanks for tuning in this week to the Wealth Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show. And in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram and YouTube at Wealth Juice Official, where we post daily tips, tricks, and document our own journey towards financial
And
freedom.
I think I would take time to be thoughtful about, when you're young getting in the game, you just kind of like try something. You're throwing spaghetti at the wall, seeing what sticks. But I think now, again, I kind of have confidence in areas where I know I could monetize. So I would be very thoughtful about being waiting for the right opportunity, finding the right opportunity, and making sure that the first thing out of the gate was going to provide that foundation in order to move forward. And probably the unpopular answer for many people listening is I would probably just get a job first and make sure I had income, because it's like that thing when you're on an airplane where they say, make sure you put your own mask on before you help others. Like, you've got to make sure your financial needs and your family's financial needs are taken care of first before you start your side business or whatever. So I think everybody wants to say, I built 13 companies. I could go out tomorrow and make $1 million. I know Grant Cardone says that kind of stuff, which we saw him do on that reality show. But for me, I think having the comfortability to know that you just go back to basics. You got to be humble, right? You got to be humble to go back and say, look, I'm just going to take a job. I go get a consulting job, and I know I've got the income coming in the door, and I've got a base to build from.
Love it. I got one that parlays right on top of that. It's kind of like the next phase. So say you get the base level set again. Mm-hmm. Someone hands you $100,000. What would you do now to double that in the fastest amount of time possible?
I guess the answer is crypto, right? Everybody that.
I know a guy that's been working on that.
Yeah. So I think if I needed to do it, I probably would go find the absolute best operator I could find, who was raising capital, And I think a lot of people invest in things in spaces they don't understand. I've made the mistake before with teams that they don't know, and in things they couldn't actually take over if they needed to. So from an investment perspective, if I was trying to take that money and turn it around, I would make sure that I found somebody I knew and trusted and had a good track record of success, and that they were in a growth mode, and that I could invest with them, and that I could also be a strategic investor to help ensure that capital would grow quickly.
Cool. I love it.
And that could be real estate. It could be business. I mean, I really love cash flow operating businesses too. So I think there's a lot of different places you could play with that.
Cool. I think I love asking this question because we just talked, we had a conversation in the other room about looking back at our podcast and what we've done in the past, and being able to say that we've made it to another level, like whatever level that is. And I'm curious how you would define it. So like my question here, I just lost my train of thought. Hold on.
I got it. So this one, and I hope this kind of goes off of what you were going to say, Corey, but you've achieved a lot in your life, right? You've built a lot of businesses. You've probably impacted a lot of people. I know you have. At what point, and maybe
that was my question.
I knew it. I see. I can read his mind. At what point is enough for you? And like, have you reached the level or the pinnacle of success that you've wanted to reach, and now everything's giving back? I'm just curious on like where you're at on your journey and mentally with that.
So before I answer that, again, compliment to you guys, like the way you kind of just finish each other's sentences there.
Sandwiches,
yeah, sandwiches. That too, I'm sure. But it's beautiful to watch the energy you guys have, and that's when you know you've got a good partnership, right? Like, you're going to thrive together if there's not discord. And so for everybody looking to find a partner to start a business with, make sure it feels like this. Like, if it does not feel like this, you're going to fail. It's really hard to put the energy and effort into a business that you're going to have to do to grow and scale if you don't like the person you're with.
Before you answer that question, I just want to make a note of that, because I 1000% agree when people say, what makes a good partnership is complementing skill sets. I was like, I firmly believe that trust and like love, if you will, for the person that you're going to battle with is far more and above, I'm an operator and I'm a salesperson. So, I mean, I don't know if you would agree with that. I know we're kind of going off of the original question, but like, to me, I don't, like, everyone's like, go find somebody that complements your skills. Well, what if they're a shitty person? Like, what if they don't agree with some of the things that you do just because they're good at one thing? And I think that partnerships have to be defined by the trust and accountability and like who you would want to like share your social security number with. Like, and that's what we've done. more than that.
And ideally, you'd have both, right? You'd have someone who's complementary skill set wise, but I mean, trust is absolutely foundationally important. And you're true. Like, you're getting married, and you're going to be filling out documents and sharing each other's information. Like, I mean, you're absolutely sharing social security numbers. Like, you probably know each other's net worths. You know everything about each other. Like, you know your mother's maiden names. Like, it's just like a marriage. And then, you know, when you sign a document, when you sign a partnership agreement, whatever it is, any contract, I mean, I have a philosophy that if I ever sign a contract that I think I will ever have to use the day after I sign it, it's not the right deal. Like, rip it up, run away. Like, if you're getting in business with someone and signing an operating agreement or signing a contract with anyone, no matter what it is, if you think you're ever going to look at that document again because of conflict and legal, rip it up and run away. Don't do it. So ideally, you're going to have both, right?
Got it. Right.
That was a mic dropper. I love that.
There it is.
Yeah.
There
So
it
the
is.
question back to the question. Yeah. How do you know you made it?
How do you know you've made it? And I think this kind of goes back to, as we talked about, what do you want to do with your business? I think you need to be pensive and reflective about what do you want to do with your life too, right? So thinking about beginning with the end in mind, I mean, it's not about a number. It's not about money. It's not about any of that kind of stuff. Like, it is, right? The reason I kind of like the financial reward system is that it's a kind of irrefutable benchmark, right? Like, it's, you know, no one can argue that you've been successful if you sell a company for a certain amount of money from a financial perspective. But success means a lot more than that, right? So when is enough enough? I mean, I've kind of shifted my thinking. In the early days, you kind of do the math for FIRE, right? Like, how much money do you need in the bank to get the interest rate to, like, live the life you want to live and never have to work again? And we've all done that math. You all probably know your number if you subscribe to the FIRE methodology. But, like, once you hit that, you know you're safe. And I've been there for a very, very long time. But I just felt like I wasn't done. Like, I like building things, and I like kind of bringing. I've been playing with, like, how to phrase this, but I'll test this with you guys. The thing I'm playing with now is my purpose on this planet is to help people, ideas, and companies reach their potential, right? So companies, through consulting, I help them reach potential. Ideas, as an entrepreneur, I help those kind of come to their potential and have a life of their own. And people, I love doing this kind of stuff. I love, like, trying to, you know, I struggled to figure out how to be an entrepreneur for a long, long time. I knew as a very young kid, I knew I wanted to build things. I knew I wanted to be an entrepreneur. I knew I had it in me. But I didn't start my first business until I was 28, like my first real business. You know what I mean? And it takes a long time. So I always was looking for this kind of a group, or to find people like you guys. Like, there weren't podcasts when I was coming up necessarily. So just I think finding kind of what you want to do to give back and stuff like that, finding your purpose. You know, I think I'm definitely comfortable from a financial perspective, but, like, there's still probably more I want to do. You know?
Yeah. Do you feel like you need to achieve financial freedom in order to be able to utter those words? And I say that because I'm kind of thinking, like, when people say, like, money isn't everything, and I agree that it's not everything, and I wouldn't consider us. We could probably be financially free if we wanted to, right? But, like, we're not, like, living this lavish lifestyle, right? But my point is until you get to a point where you're at a level of comfortability where you can say, like, oh, this is my purpose, I feel like it's not even, like, the people that are trying to figure it out along the way, like, that's a hard thought for them to have. Would you agree that it took you up until the point of, like, okay, I am now comfortable, baseline FIRE, now I can start to pivot my mindset? Is that fair to say?
Yeah, it definitely changes when you hit your FIRE baseline, and then there's other milestones financially where it kind of changes more, where you kind of have different levels of comfortability. But, you know, I think, again, if you have the patience to do things the right way, and you live within your means, and you follow the Mr. Money Mustache methodology, right? I think most of the most successful entrepreneurs that I know, that I've modeled my life around, are the ones who aren't flashy, right? They're not going out and buying Ferraris. They're not, like, flying private jets everywhere, because they're investing in themselves or investing in the future. They're building the safety nets, right? And I think, you know, I heard this a long time ago, like, the true definition of wealth is if you can live a lifestyle of 4% of your net worth or less per year, right? So, you know, and if you're never depleting principal, you're only living off of that. Like, there's lots of ways to look at that. But I think the important thing is that if you're, you know, you kind of do that dream line, you get to a place where you know that your basic needs are taken care of, your family's taken care of, all that's good. I totally agree with you. When you get to that point, you put your mask on first, you can help other people, right? You can start to think about things differently because you're not struggling to survive. You're moved past Maslow's hierarchy. You're into the higher level of, like, how do I want to impact the world and stuff like that.
Yeah, I think you've reached the next level, right? And it's just so interesting as there's levels to this game. I just feel blessed to be in the room here. We've been searching for someone like you to just even have a conversation like this.
That.
Yeah, so seriously, thank you. And it's just eye-opening, and it's really cool to see, like, what we could potentially be as we keep going and not stopping in this journey, right? And so where I want to go here is, like, you get to this point where money becomes, you know, you're free, right? And you're not strained to the dollar. You don't feel that weight on your shoulders, and it changes your mindset about the world, and you start kind of reflecting and realizing. You talked a lot about reflection, and I think we need to do a better job at that. But like, it really comes down to the people you surround yourself with, and the impact you make on the world comes through your relationships. And that's kind of your next stage, which we mentioned kind of offline, is like you're really trying to give back in a creative way and like showcase your skill sets in a way that doesn't show all the things you've done, but how can you help the most amount of people? And I think that's what makes the world go around. So it's just a really interesting concept, because we're not close to where you are, but we're already feeling that. We're like, listen, like there's people reaching out to us on DM, email, et cetera, or just they listen to the podcast and they're like, oh my God, I can't believe you guys have 70 plus real estate units and here's your net worth. And like, how did you do it? Yeah. And there's just so many people that need help is where I'm getting at. And just that's part of the podcast for us, is like, just if we can give back in any way, it's like sitting down for an hour and riffing and getting in higher level rooms, like people like you who've already made it 10 times over, and just like sharing more wealth. And like, if someone gets one piece of information, Jesse, who's running this whole immersion season 3, listened to our podcast 3 years ago, and along with others, and he had reached out to us and kind of just updated us along his journey. And then one day told us, hey guys, just want to let you know, I escaped the W-2 and I'm doing this full time. I'm like, dude, I swear to God, there was tears in our eyes. We're like, are you kidding me? First of all, we didn't really even know who Jesse was. And like, fast forward to now, we're at his event that he's hosting filled with 7, 8, 9-figure entrepreneurs. And just being in rooms like this, like, you can't put a dollar on it, because it's relationship capital. And, I kind of took me a while to get there, but I think I've found a lot more value now as I've gotten older, maybe because I've reached a level of wealth, or maybe a level in my entrepreneurial journey where I'm just like comfortable with myself and confidence, throw a kid in the mix, right? Like my life has changed. And so I value relationships more than capital at this point. And I think it's so important for people to hit that as soon as possible.
Absolutely. Well, and another shout out to Jesse here too. I mean, it's not just everybody talks about in these rooms, it's about the net worth of the individuals in the room. And like, I think it's cool. You guys said like, I wish I could see the net worth sign above somebody's head. I used to think that way too. And I'm like, I want to learn from those people. But one thing I've learned from Jesse here is it's not the only factor that matters, right? And if you think about groups like this, part of the reason this weekend's going to be great and this group's going to be great is because of the type of people that are curated here, right? So yes, they're successful, but as you talked about finding your right partner, there's a different level of trust I have in this room in particular than I do in other masterminds, because people here care about each other. There's a good group of people here. There's this go-giver mentality, and everybody's here to help. Like, none of us are paid as speakers or any of that kind of stuff. Like, we're just here because we want to be here, and we want to talk, and we want to like kind of share back with the world. And like cultivating those kind of relationships, it's not purely net worth driven. It's not purely wealth driven. And I think just in the short time I've known you guys, I feel like you're already keyed into that. And that's why I think you're feeling that success from your network, because you're feeling that come back to you as you share what you have with the world.
I love it. I think the more that you pour into others, the more that it finds its way back to you. And I know that sounds hard to do. Like people that are listening, then they're in the beginning stages and they're like, you mentioned you got to take care of yourself, but the more that you pour into the people that are around you, osmosis, it'll come back to you. And it's proven to us. And I think that's why we're sitting in this room. But last question for me. If you had to give one piece of advice to an entrepreneur that's afraid, or a budding entrepreneur, aspiring entrepreneur that's afraid to take the leap, what would that piece of advice be?
It would be work hard, don't stop, and don't give up your day job until you fully are comfortable that you have your mask on first before you start trying to grow and scale. Everybody tries to leave too soon. Like, be patient, persevere, and if you never give up, you're going to get there. You're going to find a way. It might be your first business, it might be your second, but certainly by your 10th, you're going to figure it out. So keep going.
Ken, this was an absolute pleasure. We started Immersion Season 3 off with a bang. Couldn't have asked for a better interview, and just a great guy to get to know. And selfishly, I think Corey and I will be seeking your services, at least networking with you this weekend. So we're excited, man. Thank you for starting us off with a bang, and pleasure to get to know you today.
Likewise, guys. This has been awesome. Thanks for being gentle on my first podcast.
Thanks,
Cheers.
Ken.
All right.